Welcome to the Investing for Beginners podcast. We have a special guest today. I think this is going to be a really fun conversation. We have David Gardner with us. He is the co-founder and chief rule breaker at the Motley Fool, as well as chairman of the Motley Fool Foundation. So, David, thanks for joining me today. It's great to have you on the show.
Really happy to be here, Andrew. Thank you.
I would be curious to hear a little bit about your backstory. I'm sure listeners know Motley Fool is one of the OGs, a big company in the investment industry. Like, how did you even get the idea for that? What's it like co-founding a company with your brother?
Well, first of all, yeah, we're in our 32nd year, and that means it's 32 years more than I ever expected this to be happening. So it's been really a delight, Andrew. We started as a newsletter just back in the pre-web days. I mean, a print newsletter it was basically for our parents' friends is my joke, although it's not really a joke. It's true. They were the only ones who pay us $48 a year for our subscription business. And we were writing half about the stock market and half about other stuff we love, like sports or entertainment, just a print newsletter. And the name came from Shakespeare. And both my brother and I are English majors. And so as I was casting about for what we should call this thing, I just came across a simple line from As You Like It, which is one of Shakespeare's comedies. It was just a fool, I see a fool in the forest, a motley fool. And as I sat there with the Penguin book of quotations that night and thought about, what could we call this newsletter? I kind of loved that because I loved the fool characters that I'd studied in college, UNC Chapel Hill, where I was reminded that they're the ones who go against conventional wisdom. They're fools after all. They do so with humor. They're the only ones who really had license to tell the king or queen the truth. That was kind of the role of the fool, and they did so with humor. And so I just thought that's a great position to be coming from. And, I love the name of your podcast because I think we're all beginners. We should all be taking beginner's mind. Even when we look at topics that we feel like we know, you learn a lot from just ground zero thinking at different points in life. So I think in a lot of ways, our name has been just a wonderful, unintentional benefit. And as we became all of a sudden a company, we were starting to hire people. Back in the golden age of America Online, the decade that America came online, the 1990s, we were right there on the front screen for AOL members. People found out about us. We wrote books. We started a radio show, other things, and grew into a company. And, it's been so much fun doing it with my brother. We certainly do have our moments of friction, as anybody will with their sibling, but we love each other. And I think what we've created for the world has been something we're proud of and something that we hope makes the world smarter, happier, and richer. And that's the purpose statement of the Motley Fool, to make the world smarter, happier, and richer. And so every one of our 375 employees would know that by heart because that's what we think about. That's the lens we wear every day.
That's really cool. I'm right there with you. Did not go to school for finance or anything, engineer by trade. So you are not alone there. How does a English major get interested in the stock market? What's the story there?
Yeah, it starts with a father who raised that English major, both of his boys, to really love the stock market or think about it. Our origin story, I've told this one before, and I hope I haven't embellished it. It's true, but we tend to embellish things that you tell over and over. But this is true. We grew up in Washington, D.C., and we would go on Saturday morning. Dad had the responsibility in our family to go get groceries for the week ahead, so he'd take his kids along with him. And he'd say, hey, kids, look, right there in the Safeway in Washington, D.C. Hey, kids, look, chocolate pudding. We own some of the company that makes that chocolate pudding, a few shares through the stock market, of course. Let's go get more chocolate pudding. And so it made him a very popular dad. And from early days, we were being coached to understand that we're growing up in an amazing thing, an ownership culture, where you and I and everybody listening and watching us can be a part owner of the companies whose products and services we esteem, we use every day. And that's through the stock market. We were raised on games. We're all gamers in the Gardner family. I think I have 668 board games. Oh, wow. I know that because I keep a spreadsheet with them all in it. Nice. So I am a fanatical, capital G, gamer. And the stock market is an incredible game. So we were raised to take it seriously. And we take games seriously, by the way. A lot of people think games are for kids or silly things. I think they're beautiful things. I think it's an art form, and I love games. So the stock market is just a fantastic game. And I think a lot of my book, Rule Breaker Investing, is all about how to play the game differently than other people are playing it and how to win the game, at least in our own way. And I would say grandly, because I'm always trying to maximize my returns from my investing. Therefore, those things all conspired, Andrew, naturally to cause us to become investors. I will also close this answer by saying that Dad, at the age of 18 for each of us, Dad gave us the portfolio that he had invested for us from birth. So I didn't know at age 0 that he'd been saving money and investing. Somewhere around age 8 or 9, I started to realize I've got this portfolio. And in our early teens, while other kids are playing wiffle ball, we're out there learning about financial statements. He was prepping us to be ready to take over our portfolios when we turned 18. So certainly that was an incredible gift and something that I'll always be grateful for. And I've tried to pay it forward in a lot of ways. That's kind of the purpose of the Motley Fool. It grew out of Dad's love of the stock market and his sons who started the company. So that's how some of these things came to be. And that's what I'm all about, is breaking the rules, the ones that we should break, not the ones we shouldn't break, in order to win the game of investing.
That's super cool. It's amazing that this idea of being part owner of businesses is still somewhat of a novel concept in a lot of society. And that's one of the things I'm really excited about when I read your book. There's a lot of different investing books out there, and a lot of them can be kind of dry or they sound the same. But I put this kind of in the camp of like the Peter Lynch book. Certain books just make you excited to invest or excited about the stock market. And I feel like you kind of hit that with this Rule Breaker Investing book.
Thank you. I loved writing it. And really, at heart, I am a writer. This is my 8th or 9th book, but it's actually my first book, because all other books were half written by me, half written by my brother Tom, our CEO at the Motley Fool. And we've had fun writing books together, but this was really my final stock market book after 30 years of stock picking. And at heart, I'm a writer, and I just wanted it to be really fun and also short. I didn't want to write. My editor at Harriman House, the publisher, was like, you know what people really like, David? They like short books. And I was like, I agree. I like short books too. And so let's make it short. Let's keep it short, but let's make it high energy and fun. But this is about a deadly serious topic as well. And I know you know that too, Andrew. Part of what we do at The Fool is we put forward our stock picks, and then adults around the world follow us. And so when I'm right, it feels great. And when I'm wrong, it doesn't feel great. So there's a lot of responsibility that we've borne for now into our 4th decade as a business. But I love it. I have so much fun with the stock market. I love thinking about why one company succeeds and another doesn't. And I try to put my money on the one that succeeds. And so I wanted to bottle all of that in one very fun, readable, fast book.
And you've certainly had some winners. Just to throw a couple out there: Amazon, Starbucks, Nvidia, Netflix. Do you have a favorite of these? One that like really gets you excited, or is it kind of like having children? You don't have a favorite?
Well, first of all, I try to love any company that I would add to my portfolio, and I really take that seriously. And since you've seen the book, you know that investing, that word is a really important word for me. It's a lot of people think it's synonymous with trading. I think it's the opposite of trading. And so investing comes from the Latin root for to put on the clothes of. That's why a phrase like priestly vestment is the same Latin root, investere. And so what I always picture as a sports fan, and I know a lot of sports fans are watching us right now, it's people putting on the home jersey going to the stadium for the weekend game. And whether their team wins or loses that game, whether the stock does well or not that day or week or month or quarter or even year, we're not going to change our favorite team. So I take it really seriously when I add a stock to my portfolio, and I hold them for long periods of time. That's why it's so awesome to have a 16-cent cost basis on Amazon, which is going to be my answer to your question. Do I have a favorite? I would have to say Amazon, because Amazon has been, I think it's been the greatest stock pick of the last 30 years. It has been an absolutely, it's up 1,400 times in value for me. So I also loved the Peter Lynch One Up on Wall Street book, which was a classic for me one generation ago. In some ways, I'm trying to redo that for this new generation. The fun that Lynch has, the inspiration that he gave us as individual investors. You can beat the market. And there's a lot of people who don't think beating the market is possible, or it would just be luck. I completely disagree. But it's Amazon that I have bought and held. It's not the only one. I don't want to be a one-trick pony. A big part of the book is lots of different rule breakers. Like, what is a rule breaker? Well, Amazon is a quintessential example. I also think that Jeff Bezos is, from the earliest days, his focus on being Earth's most customer-centric company. And for those who may just be listening to us, you don't realize that I just air quoted. And I apologize for people who don't like people who air quote. I just did it. But that really was the line that Bezos launched Amazon with. Back then, it was Earth's biggest bookseller. And that was like, I still have my mouse pad that says Amazon.com, Earth's biggest bookstore. And, it's funny to think how it started. It started so small, like every great thing. But it has just been phenomenal. So I would say, Andrew, that Amazon is my favorite. It's not even my largest holding. My largest holding is Netflix. But yeah, Amazon has been an absolute monster. It has taught me so much and really has been an incredible business for not just Americans, but people around the globe. If you talk about the service that they perform every day for so many of us, it is incredibly impactful.
Yeah, my wife would agree with you on that one for sure. But I would love to get into kind of like some of the learnings from Amazon, but I'd be curious, do you remember what people were saying about the company at the time? Like, there's always haters, there's always people who are getting down on this stock or that stock. So do you remember what that narrative was when you bought it?
I do. First of all, it was that they're never going to make money. And that remained the case. They did not earn a profit for years past their founding, although they were cash flow positive before they had a profit. And that's an important thing. As all of us are beginners as investors, we should always be learning new things. So that's one thing I started to learn early that I really appreciated, which is that there's a big difference between being profitable and being cash flow positive. And a lot of listeners are already going to know that, but for those who are hearing these concepts for the first time, it's really important to recognize that cash flow is money coming in, money going out. Profit is sort of like accounted for at the end of the year. It's more of a bookkeeping thing than cash flow, which is what companies are really managing. So Amazon was for years taking in more cash than it was paying out, but it was expending a huge amount to build out its service centers and delivery and all the rest, and later huge new businesses like Amazon Web Services, their cloud business, etc. So that was the big thing. The haters, and yeah, let's call them for what they are. A lot of people were like, Barron's put on the cover Amazon.bomb, thinking that the company was going to go bankrupt, and that's the world's best known weekend newspaper covering the stock market. So you have a very prominent voice saying these guys are toast. And I would say there's a little section in my book, Rule Breaker Investing, which I call Dark Clouds You Can See Through. And just briefly, let me explain what I mean by that. If you've ever seen like Peanuts, Charlie Brown cartoons, or there are other cartoons that do this, the protagonist of the cartoon will have a little dark cloud over their head and it's just raining on them. That's the mental picture I have when people go after a company and say they're toast. People were saying that about Tesla 10 years ago. Tesla is going to go bankrupt, never going to make money. Electric cars have never really scaled or worked. Same with Amazon. So I view those as dark clouds that just sit there and everybody can see it. Everybody's saying, yeah, Tesla's not going to make money. Amazon's .bomb, etc. But when you can see through that, when because of your own viewpoint, it might be that you work in the industry, it might be that you love the brand as a consumer, whatever it is, if you think, I disagree with that. I actually think Amazon could be amazing. I think Tesla could be fantastic. When you're right, and you saw through that dark cloud, that is the most lucrative of stock market opportunities. So that's what people were saying back then about Amazon. And it's been true of so many rule breakers. And that's one of the things I really spy out and we talk about in the book is finding companies that people tend to doubt. And when you buy them early, and then you keep holding them way past everybody else, which is there are two tricks here going on. The first is you get in before most other people because most other people aren't comfortable with Amazon because they're reading in Barron's or hearing on CNBC that they're going to go out of business. But then the other side of it, the second trick you need to pull is to keep holding these stocks. Those are distinct, but both of those explain, I would say, rule breaker investing and why I've dramatically outperformed the market, and those who follow the Motley Fool, have followed this strategy, have over the years, because we're doing both of those things. And both of those things are hard for lots of other people to do, I think.
I personally like to pride myself thinking that I can get over whatever the market wants to do, whatever my stocks want to do. But when they go down, the emotions are there. So how do you, how were you able to keep the faith on companies that ended up being huge winners when it seems like everybody around you is saying otherwise?
Absolutely. And, I don't know if there's anything I can say that's going to immediately change anybody's biology or neurology, but I'll try. I think that you, first of all, need to realize you're going to invest your whole life. So investing for beginners starts with the word investing. And to me, we've already talked about the root. We've talked about keeping that home jersey on no matter what happens in the near term. If more Americans truly treated their money and their stock market portfolio like they treat their sports team, we would have more rich Americans. Truly. It's amazing how we'll stand by our team, and yet when it comes to our money, which is much more important and more meaningful our whole lives long, we often look to jump in and jump out, or like we're hopping off the bandwagon when Netflix announces Quickster. And I think we're both old enough now to remember that time, and I think it was 2011, when Reed Hastings decided to split Netflix's business into two different consumer prospects. The first was that you would keep renting DVDs through the mail, and that was going to be rebranded as Quickster. Everybody thought of it as Netflix up until that day. And then they were going to go with streaming, the new business, and they were going to call that Netflix. And that caved the stock 2/3 in just a matter of months. And yet, Andrew and everybody listening, any great stock, Amazon, NVIDIA, which has been maybe my greatest pick of the last 20 years, Amazon, NVIDIA, Netflix, Tesla, every great stock lost 50% or more of its value, usually multiple times, over the course of the long haul that we're holding it. And so if you're truly committed to being an investor your whole life, you just reframe everything as finding the best companies, buying them, adding to them over time, and not sweating the small stuff or the short term. And that even means when the company loses 50% of its value. And it's easier said than done, I know. And we're all different with our minds and our emotions. And there might be something disconnected in me. But if there is, I'm grateful for it, because I'm willing. I literally recommended Amazon back in the pre-split days. As I mentioned, my cost basis on Amazon is 16 cents. But back in 1997, 8, 9, 2000, our cost basis was $3.21. And we watched it go from 3 to 95. Wow. And that was with a lot of media attention, a lot of our members and fans buying with us. And then in 2001-2, Amazon went from 95 down to 7. Wow. So I watched it go 3 to 95 to 7. If you're willing to do that, if you live through that, you learn that lesson for the rest of your life. And in particular, since I was a young guy, just in my early 30s, I think I was 31 or 32, lots of media attention, lots of people following you, and you're a star as you make a 30-bagger on a company everybody said was going out of business. And then it drops from 95 to 7, and you stay in it. And of course, it's way, 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 way higher than that today. I think you learn, it wasn't just me who learned, it's anybody who was there with me. Many of my fellow fools, our members, people who have been with us for the long haul, our employees and our biggest fans have now experienced that. And they know that that's the way the game works. Those are exaggerated numbers. Not every stock goes up 30 times in value in 4 years and then loses almost all of it in 2 years. But as I mentioned, NVIDIA, which is the world's largest company today, and I also have a cost basis of 16 cents, coincidentally, with NVIDIA, which is just totally fun for me, that based on stock splits, for whatever reason, I have an incredible coincidence where my cost basis on Amazon and NVIDIA is the same, 16 cents each. But NVIDIA, as recently as 2 years ago, lost 2/3 of its value in a single year. So, I mean, and we're talking about gigantic companies at this point. So there's been a lot of volatility, COVID inspired in part, of course, Andrew. But I hope me talking about this makes it feel manageable to anybody. I can't make you be willing to hold a stock that's lost 50% or more of its value. You kind of have to do that yourself. And in my book, I hope telling the stories and laying down a lot of the frameworks and inspiration will help people understand what investing truly is. And by the way, it's the opposite of trading.
Yeah. Where did you get I try to think of like some of the investors I emulate or tried to emulate, right? Like a Warren Buffett or something. Your approach sounds pretty unique. Even somebody like Buffett, I don't think he's held at stocks that long. So where did you come up with this?
That's a good question. Well, first of all, I would say there's a great line by Epictetus, the classical philosopher, and it's no great thing is created suddenly. Epictetus. Great line. I love it. Cities are built on the bones of themselves over long periods of time. And that's really what I think we are as human beings. Through our lived experience, we are all kind of trying to level it up, video game terms, level it up every day or every quarter or maybe every year as an investor. And so we learn over the course of time. I think I had my learning accelerated because all of a sudden we had a worldwide business and we started it in our 20s and people were following us. So I had to rapidly learn what would work and what would not work with people following what we were doing and paying us for it as we built our business over time. So I think I forced, in a good way, an accelerated learning pattern that most people wouldn't have to worry about or think about. But we're all learning as we go. So what I call rule breaker investing today, when we started the Motley Fool, I would not have known what that phrase was. I'd be like, what's that?
Right.
So the book is built in 3 parts. It's the 6 habits of the rule breaker investor, the 6 traits of the rule breaker stock, and the 6 principles of the rule breaker portfolio. So I like sets of things, and I like the number 6 because it's enough to be rich without being so much you can't remember it all. And all 18 of those habits, traits, and principles I basically learned over the course of time. Some of them I learned from others, like Peter Lynch or Warren Buffett, and others I came up with on my own. And I mean, in the end, since I already just quoted Epictetus, I reminded everything goes back to the Greeks anyway. It's not like any of this is brand new. A lot of wisdom is centuries and thousands of years old. We're just rediscovering it in every era and trying to apply it to the circumstances we find ourselves in, let's say in the year 2025. But I've learned so much, Andrew, and I will say this. I think I've already said it. I'm repeating myself, but I had so much fun writing this book because it was an opportunity for me to just set down in order what I've learned. And it's the last book I'm writing about the stock market. I'm not going to be a new book every year about the stock market from me. This is me after 30 years of winning and losing to win, basically leaving it all out there on the field and saying, here's what I think you should do and here's what's worked for me. So yeah, I've learned a lot.
That's really cool. I mean, obviously, go get the book if you're out there listening and you're curious about some of these things. But say somebody wants to find the next NVIDIA, the next Amazon. Is there a place that you would recommend they start?
Yeah, I mean, I think I'd start with the 6 traits of the rule breaker stock. I mean, that's what I look for. And a fun note about that is that my brother Tom and I in 1999 published a book called Rule Breakers, Rule Makers. And I wrote the first half about companies that break the rules. And Tom wrote the second half about the Goliaths that end up, after breaking the rules, they start making the rules. And so that was the purpose of that book. And as I wrote that Rule Breakers section, which was the first time I'd used the phrase rule breakers in a book, I laid out 6 traits that I was using to find stocks back then. And guess what? They're the same 6 I just wrote about in this final book about the stock market. They haven't changed. What has changed is 30 years of data now, 25 plus years of seeing what worked and what didn't. When we wrote that book, I was 32. So I was saying, here's what I'm doing and here's what I think will work. Well, now I'm 59 and I've seen what worked. And it's Amazon, Nvidia, Netflix, Tesla, Mercado Libre, Intuitive Surgical. These are all completely different companies in different industries, but they all follow the same pattern I recognized when I said, look for these 6 traits. And you're not going to be able to check every one of them for every stock. But the more you see of those 6 traits in a company, if you're looking for the next Amazon, the next Nvidia, I would say start right there. And I'm happy to run through them real quick, or if you want to pull 1 or 2 of them or go deeper, whatever you'd like, Andrew. But that's what's worked for me. And the good news is I was saying it 30 years ago and I practiced it and it worked incredibly well. And I think it's going to work incredibly well over the next 30 years.
Super cool. Maybe let's do one. If we could pick
Sure.
one trait.
Let's lead off. I'll lead off with the first one
Okay.
because that's the most important anyway.
Okay.
The first trait of a rule breaker stock is top dog and first mover in an important emerging industry. If you just look across every industry and look for the important emerging ones, and then you ask yourself, who's out front? These days, for example, you could say, well, for AI, you could say, well, OpenAI with ChatGPT looks like they're out front, and I would agree with that. The bad news is it's a private company. Not every time is the company that is the top dog and first mover there and public and ready to be invested in, and yet so many are. I'll just give a quick example, a new company that we haven't talked about yet, Axon Enterprise. Is this a company you know, Andrew, when I say that name?
I am not intimately familiar with them, no.
And that's good because you spend a lot more time looking at this than most people. And for you not to know that, I recognize that makes me happy, and it should make all of us happy because it means it's not yet fully discovered. It's not like everybody already knows about ChatGPT, and so, where's the juice in that stock? So Axon Enterprise started as Taser. And so when you hear people getting tasered, which the media for a while didn't like at all, you'd hear about how somebody got tasered and they had a heart attack and died. And while that was incredibly rare, so often, of course, if it bleeds, it leads. And so financial media headlines were driving sort of a negative campaign against the idea of tasering. I think it's an incredibly great technology. Rather than shoot people with ammunition, which can kill them, non-lethal, in most cases, tasering is such a preferable choice. And it's a great technology. And that same company then went on to buy police body cameras. These days, most law enforcement in the US and increasingly in the world, they're recording what they're doing. And they're usually wearing body armor as well. And by the way, Axon Enterprise bought the company that was making that technology, which was Axon, and then merged Taser and Axon, and then added a third business on top of it, which is basically the video vault up in the cloud that has all of those videos from all of those police departments, and law enforcement subscribes to that clouded high-margin video business as well. So Axon Enterprise is a classic rule breaker. You can buy it today. We've held it for years. It's been volatile at points. It has been a monster winner. And yet, here you and I are talking about it, and probably most people listening didn't really know what we just shared in the last 2 minutes. So that's a great example of a top dog and first mover in an important emerging industry, even if not everybody knows every industry. And nobody has to be a genius. I'm an English major, but one thing I do have is intellectual curiosity. So I figure I can teach myself almost anything. The internet helps, so does AI these days. We can teach ourselves almost anything. So you can really look across so many different industries and ask who's the rule breaker in that industry, the first trait that we're looking for. And to use a fishing analogy, if you just stocked a pond with the top dog, we'll say top fish here, and first mover in every important emerging industry, and you just confined your investing to that stocked pond, you have found a pond stocked with probably some of the super stocks of the next generation and of every generation. That's exactly what Netflix, Tesla, Amazon, the list goes on, Axon Enterprise, even lesser known companies like Trex, the outdoor composite decking company, has been a monster rule breaker winner. And it's not sexy, it's not technology sounding, but it's a great rule breaker. Another great rule breaker is Old Dominion Freight Lines, which is the company that does lighter than truckload trucking and logistics, gets you stuff there using the genius of their corporate culture and their technology. they're a rule breaker as well. There are many rule breakers, take many different forms. And yet, to close my, I hope not too long answer, and yet, most companies are not rule breakers. They're rule followers. And so we're looking for the rare one, the one that's the top dog and first mover in an important emerging industry. And I'll tack one thing on, which is, what are the important emerging industries? And that's part of what we talk about in the book. But to me, looking at things like genomics, that's not just an important emerging industry. There are a number of different industries all under the subsets, all under the set of genomics, a hugely important technology. How about the commercialization of space? That is beginning. Hugely important. AI, obvious. So these technologies keep popping, and they will, and they're great. And while the internet was what popped when the Motley Fool started, which really launched us, and we were believers in the internet when everybody else, there were so many doubters. Anyway, I'm going to start just going off the handle, so pull me back in here, Andrew. But, I want to say something about how people thought that you wouldn't give your credit card over the internet when the internet started. And we were bulls saying you will give your credit card over the internet. But truly, that was like a minority viewpoint. People like, e-commerce is not going to work. Like, also, when you buy something on eBay, they're not going to send it to you. Why would they send it to you? They just got your money. eBay is not going to work. Right? There's just so much. So that happens with every new technology. AI, right? People are now down. A lot of people are down on AI. I think AI is going to be amazing. And yet you and I both know that any powerful technology, the internet, AI, etc., can be used for good or ill and will be used for both. But the good news is they're net really good because there are more good guys than bad guys in the world at large. And therefore, that's why the stock market goes lower left to upper right over any meaningful period of time, including the next generation. And especially if people are pessimistic or doubting, that's really helpful for rule breaker thinkers like me, maybe you too. I won't say, you don't have to pull my rule breaker hat on unless you want to, but I love the companies that take us forward. And that's basically what we're buying in our portfolio.
Yeah, it's fascinating. I didn't realize the power of it until recently. I don't know what I was doing, but I happened to look at the charts, Uber versus Lyft, and you see Uber's stock just do so well and Lyft kind of got left in the dust. Why do you think the first mover or top dog works so well? Like, what are the forces at play?
Yeah. Thank you, because that's another great example. I love that you brought that one in. And yes, Uber has been one of our stock picks, and I never picked Lyft. I think that's a deep question, and I would almost just say that's a beautiful question. And I'm not going to leave it rhetorical, but anybody could, because that's the right question to be asking. That has you learning and thinking. And by the way, the answer isn't the same in every case or in every industry. But if I were to just, pull back one layer of the onion right there, I would say part of what's happening is that the top dog generally is led by the person who figured out the world first, the person who figured out the future first, the visionary. And Warren Buffett has a great line, the 3 I's in every cycle. Do you know this one, Andrew?
No.
All right, let's throw it down right now.
All
So
right.
there are 3 I's in every cycle, Buffett says. The first is the innovator. That's the visionary who got out front and said, yeah, electric cars, or whatever. And the second I, Buffett says, is the imitator. They're the ones going, yeah, well, okay, Uber, well, we're Lyft, and we got some of the same stuff going on. You're Coke, we're Pepsi. The third I, Buffett says, is the idiot. And that's when you get to a stage in the cycle where everybody's now going to be trying to do an AI site or a .com, .bomb site, or maybe even an electric car that isn't as awesome as a Tesla or its many imitators. So that's the fun 3 I's in every cycle from Buffett: innovator, imitator, idiot. And so just going back to that innovator, I think top dogs and first movers are being owned and managed by those people. I think they just put distance between themselves and everybody else following them. Not every time, but generally so. And so I think that's in part why following the top dog and first mover works. One of the beautiful things about it, though, is usually they're young. Most great entrepreneurs are entrepreneurs in their 20s or teens at the start. They don't just show up at my age, 59, and come up with a great idea. I hope I can come up with a great idea, and all my fellow 59-year-olds, let's go. But it's also pattern recognition. It's also generally universally true that great entrepreneurs are born young, and you can see it early. And that's exactly the kind of person people want to doubt in the financial media. Like when you come out and you're Jeff Bezos, you're like, well, where do you come from? Like, what's your background? Or I felt that very much at the Motley Fool. Who are these silly guys with caps? English majors. They don't even like, what are they starting? And I felt the force of that for good and for ill. And so I think Buffett has another great line that I'm going to rock right now, which is I'm a better investor because I'm a businessman and a better businessman because I'm an investor. So Andrew, that you and your partner Dave, that you guys are doing this podcast, that you are in the game, that's making you a better investor. And presumably some of the things that you're learning from your stocks or your investing are helping make you a better business person, a better person kind of managing the business of a podcast, et cetera. So I think that's an incredibly profound and important insight that those things are connected. Anyway, I would say that because I've been a businessman and I've watched what started as a paper newsletter become a billion-dollar enterprise, I know what it took to get there. Therefore, when somebody shows up at the age of 26 and the financial media is doubting them, and I'm like, do you know how hard it is to have an idea in the first place and then to scale it and reach actual consumers with a product or service that people love enough that there's buzz, and then you take that company public and you've done all that as a young person? I'm always going to be betting tie goes to that person, not the media doubting them. So I think part of the beauty of top dog and first mover is they're often underdogs, right? They're rule breakers in the first place. Walmart was going to crush Amazon, supposedly. Walmart was such a much bigger company than Amazon. It didn't crush Amazon. Actually, they've both done okay, but Amazon's done way better. Walmart was also going to crush, Blockbuster was going to crush Netflix. Both of them were, et cetera. The list goes on of the rule breakers that start from an underdog position, NVIDIA, and we bought them early and we keep holding them way past everybody on Wall Street who churns out of their own positions on such a regular basis. So I think that's why top dog and first mover in an important emerging industry works so well and always, I believe, always will.
Love that. That is super cool and inspiring again. So it makes me want to go out and go find some more stocks.
Thank you.
You mentioned individual investors. Is there anything you see that kind of holds them back, keeps them from beating the market? Anything that pops to mind in a major way?
Yeah. I mean, the most obvious to me is that we're just not holding our positions enough. I understand because, first of all, most of the coverage of the markets by the media is so, what have you done for me lately? What's happening today? And so it's not really, even Wall Street itself, and there's a key moment in the book, Rule Breaker Investing, where I basically show a poll of institutional money managers. And the average holding period, the average period that they're looking at, investing everyone's money, this is institutions, this is like the big dogs, is 6 months. They're looking not just at this quarter, whether a company will beat earnings, but next quarter as well. And that's about where it stops. And they would say that in some ways they're being forced to do that because people have short tempers or pull back their money, or if the stock market starts doing poorly, people start wanting to sell or start worrying about, will it crash in the fall? These kinds of concerns. So the institutions themselves are that way. The media covering them, therefore, covers the topic that way. And there's very little coverage of actual investors doing actual investing where we're buying companies, not zigs and zags or charts. We're actually buying flesh and blood companies run by human beings doing important things in this world, and we're holding them. And so I would say most beginners, investing for beginners, and most experts, investing for experts, their biggest single error is they're not holding their positions. And the funny thing about that, Andrew, is that it's such a lazy, easy thing to do to hold positions. Like, it's exhausting for me to think about jumping in, jumping out, trying to time the market. And so often people are like, David, how do you do that? Like, how do you hold your stocks as they go down? I'm like, I'm doing nothing. All I'm doing is saving money on a regular basis and adding more into the market in every cycle. I don't try to say the market's high, the market's low, I won't invest now. I'm constantly dollar cost averaging. We all should be doing this every 2 weeks with a portion of your paycheck. Pay yourself first. You should be putting that toward the market. You should not care about where the market is right now or what people are saying. You should know the lower left to upper right incline of any meaningful chart looking at the market over time. That will continue happening for very logical reasons. And yet most people doubt that. They think their kids will not have it as well as they've had it, etc. And they're wrong. And in fact, there's a wonderful book called The Rational Optimist by Matt Ridley, where he looks at humanity over time and basically shows that every generation thinks the apocalypse is coming, it's all going down. And if you look at the gains we've made just in my lifetime in technology, it's astonishingly great what we're taking for granted today. And more good stuff is coming. And so the rational position is to be an optimist, but it's a minority of humanity that is optimistic. And I would say that may be particularly true right now, which means it makes me even more bullish about being a rule breaker. So I would say we're holding ourselves back because we're not actually investing. We're trading, we're guessing, we're hoping, we're fearing. And all we should be doing is learning, loving the companies that we buy. As business people, we should be trying to do something awesome ourselves. We should be trying to serve others for profit through our business. And those things are connected. Your professional life and your investing should be connected. And the better you get at one, the better you should be getting at the other. And you're robbing yourself if you're not doing one of those two things. If you are just sitting there in front of your trading station and you don't really have much business savvy or experience, I think you're really not going to be as good an investor as you would. And if you're an entrepreneur, but you don't care or think about the stock market or investing, I think you're really missing. You're paying a huge opportunity cost for the growth you would have had. So this is, again, tending toward a rant, and I apologize. And we're probably getting near the end of our time, so I'll try to shut up soon. But I do want to point out that most people these days don't think buying stocks is a good idea, which is crazy talk. Yeah. But it has become the conventional wisdom. So people are dollar cost averaging into index funds and funds. And I'm even okay with that in the sense that at the Motley Fool, we've talked about how good index funds are since we started 32 years ago. And it is crazy talk to think it would just be luck to beat the stock market, or you should just index and not pay attention or care. You are really robbing yourself of the learning that you get. If you don't care about your investing, you're just putting in index funds, you're not learning about Axon Enterprise. You're not learning as much as you would about AI or genomics. I love learning more because I'm invested in the world. Kleiner Perkins, the great venture capital firm, said we invest in order to predict the future. They don't say you have to predict the future first and then invest. They say we invest in order to predict the future. So I would say the large majority of Americans today who are just kind of mailing it in because they've been told, just index it in your 401k. And we've given that advice too. Like, I understand it. It is good advice. But I think the real winners, and I count myself one of them, I have won so much more grandly that I bought stocks directly and didn't really bother with funds because I cared, because I wanted to learn, and I've done so much better. And obviously the Motley Fool kind of extends my love and my brother's love and our performance to as many people as want to follow us. And for me, my book, Rule Breaker Investing, is basically the culmination of all of this for me. I don't pick stocks anymore for the Motley Fool. I stopped a few years ago just because I'm like, I don't want to spend my whole life with that amount of pressure on me to constantly be delivering to a worldwide. I loved doing it, but like a ball player, at a certain point, we're going to be like, you know what? I think I'm going to move on and do something new. So I continue to be co-founder at the Motley Fool, and I'm a fool for life, but I'm not every day coming up with my next investment idea. But the Rule Breaker Investing book is giving my entire playbook to anybody who wants to take the time to read it, and it's not very long.
Yeah, and people should definitely check it out. I think the message of optimism is much needed at this time. It's just crazy how much we need it and how inspiring it can be. What does success look like for you with this book?
Truly, success for me, I hope this book reaches as many people as possible. I hope they will read it from page 1 to page 200 something, not 300 or 400 something. And I hope that it will improve their investing, their business, and their life. For my own podcast, which is called Rule Breaker Investing, I always say I spend a third of my time on investing, a third of my time on business and your professional life, and a third of my time on life, because that's what we're all living together. And for the Motley Fool, we're trying to make people smarter, happier, and richer, not just one of those, and never two without the third. So from my standpoint, Andrew, I would say I already feel like I've won in this sense. I wanted to write this book. I've been keeping notes for it for 15 years.
Wow.
And if you talked to me 5 years ago on Investing for Beginners podcast, I would be like, yeah, I'm going to write a book this year. I'm going to finally do it. And I didn't, and I didn't, and I didn't. And then finally last year I wrote it. And I had so much fun. I didn't need deadlines from my publisher. I just did it. And then this year it comes out. My aim is to try to reach as many people as possible. I truly think it makes the world better. I think it is a life improvement tool. And so I hope people will find it, love it, and share it out. But I already feel, as an artist or creator, I already feel like I've had the baby and I love it. And if not everybody loves my baby, I'm okay with that because I love it.
Awesome. Yeah. Well, it's been an honor to have you on the show and have you talk about the book. It is going live September 16th, 2025. It's a special date for me. So people should check it out. I'm going to just assume it's going to be on Amazon. It's going to be at all the great places. You mentioned...
Yeah, you can pre-order it now. It's already out there. So, but why is it a special day for you, Andrew?
It's my daughter's birthday.
That is totally awesome.
Yeah.
I love it. That's a good mnemonic. When Rule Breaker Investing comes out, Andrew's daughter's birthday is happening too. Those things, especially for listeners of this podcast, they are synchronicity, man. This is connected.
Did you pick the 16th on purpose?
It was totally the pick of Harriman House, my publisher.
Look at that.
They know what they're doing.
Yeah.
And, fall is a good time for books to come out. More people are back to school, back to work than if this had come out on August 16th, for example. So I think that's their thinking. But congratulations on having a family. And I will say, Dad, that, getting her going, starting a portfolio for her, I'm sure you already have. Everybody listening, though, I'm so grateful that my dad started a portfolio for me when I was born. And it had 18 years of compounding, not 80 years of compounding. I'm going to let it get there one day when I turn 80. But it was compounding before I understood what compounding was. It is an incredible gift to give to people, but especially putting stocks in portfolios for kids that they understand. They may not even be the best stock picks, but they're right for that kid. That will accelerate their learning in a really powerful way. So yeah, Investing for Beginners includes all of those kids, born and yet unborn, that we should be thinking about, because that's why we're investing in the first place in a lot of cases. Anyway, I always love talking to family people, and congratulations to her. Happy birthday.
Thanks. So people go check it out. Rule Breaker Investing. Thanks so much for joining us, David. It's been a pleasure. That's going to do it for us today. Remember to go out and invest with a margin of safety, emphasis on the safety, and we will talk to you next time.